So a lot of you are not aware that there are tax benefits to trading futures in a personal account. All right, so this is one of the major differences between trading in a prop account versus a real account. All right, I talk about this pretty often. Okay, so I'm gonna do a simple hierarchy of your approach as a new trader. Okay, if you're a brand new trader and you have funds that you're willing to commit to learn trading, my number one recommendation would be to open a personal account. Okay, prop firms are a great tool. So you should open a personal account and copy trade that to a prop firm. That's the best way to start today with how popular prop firms are and with the amount of options that there are. We're not going to go super deep into which one you use whichever one you want to use, but 100% starting your own personal account is the best way to start. Why? Because of the tax implications. Option two, let's imagine you don't have a budget at all, right? You're very, very low on budget, would be to start with prop firms. Then as soon as you have a couple $1,000s in payouts, fund your own account and copy trade both. I'm going to break down the differences just between taxes at a high level for trading, as well as taxes for futures in a personal account versus in a prop account. For those of you who are new here, my name is Forrest. I invest in stuff. I'm a day trader. I've been day trading for a while now, have over 7 figures in profits in my own personal account. I've had major wins, major losses, and I focus now on bringing trading for real to people on my channel. It is my dream to help as many people as possible just unlock new ways to make money, whether it's you want to buy a Lambo and a crazy house, or you just want to spend more time with your family. I will say, just on that note, most of the people that I talk to, especially as I spin up this coaching program I'm working on, really just want to spend time, with their family, have financial freedom, travel, and things like that. And that's definitely something that I vibe with a lot more than, chasing all of the material things in life, especially with a lot of things that I went through personally in my own life, as I get older. So not going to sit on that soapbox, but I do think that trading is a powerful tool. And, working with you guys continues to motivate me to do better, become a better teacher. And yeah, I just, have immense amount of gratitude for all of you that participate and give me feedback and stuff like that. Taxes. So let's talk about taxes from prop firms first and foremost. Okay. So when you trade with a prop firm, you are a contractor. Okay. You're a contractor and you're going to get paid. You'll see if you just started this year, you haven't went through a tax season yet, but you will get a 1099 from the prop firm, right? Showing you the income that they paid you. Okay. And they are not going to withhold taxes from this in many cases, right? So you're going to be responsible for paying taxes on income earned as a contractor from that firm. So let's just use an example, Apex. Well, let's imagine you had one 50K account, you got one payout in the entire year. Okay, let's just imagine that's the case. Keep it simple. It's like 2,500 bucks. Okay, so how is that going to be taxed? That income that you made is going to be taxed at your marginal tax rate, personal marginal tax rate. So I'm gonna have to bust open the computer. I had to make sure I was recording to talk about this. A lot of this stuff I can just go off the top of my head because I have a pretty diverse background in finance, but this might be a new topic to some of you guys because you're just learning about trading and you're not thinking about some of these second and third order consequences. So this isn't going to be a tax 101 course. Think of this as an intro to these ideas, and your homework 100% should be to understand the consequences of your financial decisions. Okay. This video would be 2 hours if I had to break this down. I might do some follow-up videos. So again, your homework after this is, now that you have awareness about the implications, you need to figure out what your personal tax strategy is going to be. It doesn't mean it's scary or bad. Okay. You pay taxes when you make money. I'm going to say that first and foremost. But what you don't want to happen is you get the tax season, you've spent all the money you made, you owe the government $2,000 and you don't have $2,000. Okay. So let's talk about tax rates. All right. So I just plopped open Google and typed in 2024 marginal tax rates. People often think of this as tax brackets. All right. Now, here is important to know, every single one of you is in a different tax bracket, possibly, than the other viewers. You're not all in the same tax bracket as me. Okay, so we're just going to take this for what it is, assume it's correct. These numbers could be off by a little bit, but the general format is definitely correct. Okay, so you're going to be taxed, when I said earlier, at your marginal tax rate. This is what that means. If you make $23,000 to $94,000, okay. Oh, it actually breaks it down for you. That's nice. Okay, so it's showing you the taxes that are owed in this table. It's going to show you the taxes owed from the previous bracket plus the amount in this bracket. Okay, so this is a perfect, really good representation of your tax bracket. So let's imagine that you make $23,000 to $94,000 a year. Okay. And the way that you calculate the taxes that you owe on that $2,500 is that you're going to owe $2,320 plus 12% of the $2,500. So we can just do 2,500 times 0.12, $300. Okay, very, very simple. So you're going to owe $300 on the $2,500 you made, which is a lot. That's a big chunk of it. You need to keep that in mind. So when you get that payout, don't go and spend the whole thing. You need to put some of it away for taxes. I say that because some of you might get, say you get a 20K payout. All right. Let's imagine that you're in this bracket. Okay. 20,000 times 0.12 is $2,400. So if you get a $20,000 payout from Apex or whatever firm, okay, you're going to owe that $2,000, $2,400 in taxes in this bracket. Okay, let's imagine that you're much higher in the bracket, right? You make $731,000 or more per year. Okay, this is me in some cases, or even now, honestly. And this is personal taxes. This isn't corporate tax rate. If you're trading inside an LLC, both could apply. Okay, but if you're making $731,000 per year or more, you're going to owe 37% of that. So let's imagine you're in this tax bracket. You make 20K from Apex. You're going to pay $196,000 in taxes plus 37% of what you made. So we're just going to do times 0.37, $7,400. In any bracket, this is the scenario that you can end up in and that some people do. Okay, if you're making this much money, the more you make, probably the more insight you have into taxes, honestly, it becomes a bigger problem. That's what happened to me. It's what happens to everyone that I know. You make more money and your tax bill becomes hundreds of thousands of dollars. You start to care a lot more about your taxes. Okay, when you're in this middle place, that's where you're kind of just like probably using TurboTax. You're not paying much attention. It's really easy to forget, especially if you splurge, right? So you make that money, you splurge, you spend it, you don't have it anymore. This is all personal taxes. The other implication of this is that this is not trading income, right? These are not capital gains and losses. Okay, I want you to keep that in mind. You're paid as a contractor. I said that earlier. You're paid as a contractor. So this is just going to show up as personal income, right? You've probably heard of capital gains taxes and capital losses. This isn't any of that. Okay, you are, as a prop firm, is paying you for performance in the markets. You're not actually truly speculating with your own money in the markets. You're not putting your own capital at risk in a prop firm. Okay, you're trading sim funds. This is really important to understand because none of the gains or losses are carried over as capital gains or losses when you're trading with a prop firm, which is just important to keep in mind. Okay, in a personal account, the maximum carryover loss is, I think, $3,000. We could check that. Let's just go to Google. Let's say, what is the maximum carryover loss for capital gains, or say capital losses? Yep. Carryover net losses are more than, you can report your net losses up to $3,000. Okay, so you can only carry over $3,000 to the next year, and then it keeps going and going and going and going, which means that if you have $20,000 in sim losses, you can't carry those over, right? So you have an account that you run it up, you start losing money, you can't use those losses. Or if you first start an account, really the way that this would work in a prop firm is you first open an account, you lose money. Those aren't capital losses, okay? How does this work with real money? All right, let's just use the official response. We're going to say in Google, what is the capital gains tax rate for SP? We'll just say ES futures. Okay, this is where it gets really, really interesting. Okay, trading futures comes with a unique tax advantage over trading equities and ETFs. Under Section 1256 of the U.S. Internal Revenue Code, when trading markets such as futures, capital gains and losses are calculated at 60% long-term and 40% short-term. Okay, what does that mean? Short-term capital gains have a higher tax rate than long-term capital gains. Okay, so what this is saying here is that capital gains and losses are 60% long-term and 40% short-term versus 100% short-term. So as a day trader, right, for something to count as a long-term capital gain, you have to have a holding period of over 1 year. Okay, if I'm trading inside a day, it's obviously not a 1 year hold. It's a few minutes, few hours hold, right? Few days even, few months even. Okay, that's not a long-term hold. But futures has a special tax rate. We have a 60% long-term. It's calculated, 60% of it's calculated as long-term, 40% short-term. So let's look at this little example that they have here. If a futures trader in a 30% income tax bracket reports a $20,000 profit on trades for the year, $12,000 of that profit will be taxed at 15%, while only $8,000 will be taxed at the regular tax rate. Okay, so $20,000 profit times 60% long-term capital gains. The gains rate is 12,000. 20,000 profit at 40% short-term capital gains rate equals 8,000. Okay, now let's contrast trading futures with trading equities. If an equities trader reports the same profit of 20,000 and is in the same 30% tax bracket as the futures trader above, 100% of that profit would be reported as short-term capital gains. Okay, versus the split, which means that you're paying $6,000 total taxes on profit. So you have $4,200 total taxes on profit versus $6,000 total on profit. Let's think about what that means. Okay, this scenario is essentially what happens to you when you're trading prop firms, because you're not getting any of this split, right? So you essentially, if you were in that tax bracket at 30% on $20,000 times 0.3, you can see it's $6,000. If you're trading in a personal account, you would only owe $4,200 on those taxes. Okay, so you can come back and mull over this actual breakdown. That's irrelevant. What's important here is the big boxes. And this is the awareness that I wanted to bring to you. Okay, the big boxes of the type of income. There are types of income. So there's personal income, there's personal futures income, okay, and there are long-term and short-term capital gains that apply to different income types. Okay, prop firm profits just come in. That's your personal marginal tax bracket. Trade futures in your own account. You benefit from the 60-40 split on capital gains and losses. Also, when you trade in your own account, okay, you can properly apply losses in the market. Okay, so if I make 100K in prop firms, let's say I get a payout from Apex of 100K, and then I spend $100,000 on accounts, which is crazy, right? You spend $100,000 on accounts. You can't count that against your gains. Okay, that's just money that you spent. You're still gonna owe the taxes on that $100,000. Okay, it's a big, important difference that a lot of people don't understand or know about. Okay, you're gonna owe taxes on income. Okay, you can trade under an LLC in a business where you could then expense things according to your profits. There are things like that you can do, but in general, these big buckets matter. Okay, that was the point of this video. If this is like sending off alarm bells in your head, guys, this isn't intended to fear monger or anything like that. I actually got a comment. It was like, hey, can you talk about the differences between taxes in prop firms and personal account? So I thought it'd be good to do like an awareness type of video. I could break this down in a spreadsheet, but I don't think you even need to go that far. Again, we're all in our own different financial situations. So this goes back to what I always say, prop firms are a great tool. There are pros and cons. There are consequences to the financial decisions that we make, guys. Nothing in life is free, okay? Not in this country. I don't know where all of you live watching my videos, but I can tell you right now, nothing comes without strings attached. There are always strings attached. Some strings are good, some strings are bad, okay? But everything in life has strings attached. This is me just preaching at this point. So you need to know what those strings are. If you ever are participating in something related to money and you are convinced or there's the illusion that there are no strings attached, then you are ignorant. Okay, you are naive and you are missing the bigger picture. I guarantee it, because there are always strings attached. You do not make money ever without strings attached. All right, in this case, it's taxes, but just keep that in mind. Okay, just keep that in mind. Making a lot of money, okay, taxes are usually a problem to have, right? You pay taxes when you make money. So don't over freak out about this. This isn't something like you should be overly concerned, but just understand, if you say you hit it big and you got a payout and you spent that whole payout, that's the situation that I really want to save you from. Okay, so you need to be putting money into the bank. You need to be calculating what your taxes are, because the prop firms aren't going to do this for you. And if this is your first year trading props and you got a payout, you hit it big, maybe your P&L's lumpy, right? So you got some payouts, you're still blowing up, you're in a boom and bust cycle. Unlike in a personal account, when you're in a boom and bust, right? It's all in one account. With a prop firm, you're getting paid 1099, so you're getting income. None of your losses are capitalized against your gains. So you're gonna owe money on those gains, even though that you're incurring losses, paper losses on other accounts. That's the point of this video. If you have questions, leave them down in the comments. This topic is definitely probably worthy of a follow-up video. So just want to get some awareness out there into your minds. Do your own research, own homework, open up a spreadsheet. If you don't have spreadsheets and you're in this game, you're doing it wrong. You should have spreadsheets all over the place, figuring out what your personal, financial tax burden and financial outcomes are going to be. Nonetheless, subscribe to my channel. See you in the next video. Peace.